And we are live. What's up, everybody? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. Another crazy day today. It's been super volatile. Market's been up and down. Cryptocurrency is going absolutely insane. Stable coins are no longer stable. Bitcoins is now below 30,000, firmly below 30,000. And we're going to get into all of that. We also have earnings today. We have Disney, Beyond Meat, Bumble, Rivian, a couple of other names that we're going to be talking about as well. So make sure that you're staying tuned for that, as well as the over-under segment at the end of the show. Make sure you're putting your overvalued or undervalued stocks in the chat. Oh, you're going to put in over under and your favorite ticker, and you're going to get my thoughts on whether or not I think that your stock is overvalued or undervalued. Love to see you guys there at the end of the show. So make sure you're doing that. And also make sure you're hitting that thumbs up. Hit the like and subscribe button, guys. I do this every Monday through Thursday at 3:45 p.m. Eastern time. I give you a snapshot of what's going on in the overall market, and then we react to earnings. If you want more of Own the Chaos, though, I put out 5 stocks before the market opens every single day that I think are worth watching. My watch list is super valuable. I put out a fundamental analysis as well as technical analysis in each one of those stocks that I put out, as well as all kinds of other stuff. I give you some macro outlooks as well. If you guys are interested in that, make sure you're hitting the join button next to subscribe, or you can go to the link in the chat as well. Would love to have you guys there as a part of the crew for $4.99 a month. You just can't beat it. So, guys, before we get into anything else, as always, let me hit you guys up with the starting 5. We have Jeff Panicka in the house. What's up, man? Housekeeping, John Musel, Oliver Thorpe, and George Nikas. You guys are our starting 5. If you guys missed the starting 5, again, like I said, make sure you hit that notification bell so you get notified when I go live, and you just might get shouted out in that starting 5. Man, what an unbelievable day. Right now, it is May 11th. 2022, and it is absolutely unbelievable, guys. The way that the market has been going, I've never been I've been on YouTube now. This is my 5th year on YouTube. I've been, investing several years before then. This is the craziest I've ever seen the market. I mean, I lived through Brexit. I lived through all kinds of stuff. Lived through the Great Recession. Did not experience the dot-com bubble. This is the craziest I've ever seen the market like this. So looking right now, the S&P is down. It was red, then it was green, and now it's actually officially down. 63 points. It's down 1.5%. It is now below 4,000 at 39.37. The Dow is down below 32,000 now. It's down 300 points, which is good for 1%. The NASDAQ is down 376 points, ladies and gents. It's down 3.25% and is almost about ready to go below 11,000. We got another 300 points or so to go. Then we have the Russell 2000. It's down 2 points, and crude oil is back up. Surprise, surprise. Another 5, almost 6%. It's at $105.50. That is your WTI crude number. Man, just unbelievable where things are going right now. Considering, what's been going on in the market. I mean, I just don't. I don't want to say I don't understand it, but there are some things I think that are worth noting. If you guys recall, I talked about this in Stockwatch Sunday. We talked about how it seems as if the markets are getting a little bit ahead of itself. If you recall, between 1990 and 2010, 10-year yield was up around 5%. And at that time, during that stretch, the S&P 500 was averaging around 17.7 times for PE. So next year's earnings. Right now, the S&P is trading at around 17 times now, close to 17 times next year's earnings. On Sunday, it was 18 times. So I'm assuming it's probably close to 17 times. I'd have to check that. But either way, you look at the 10-year note and it's hovering right around 3%. Which tells me that this is a little bit overblown. Did we get ahead of ourselves in 2020 and 2021? Without question. I think everybody can agree to that. But have we gone too far in the other direction? And I think that there's certainly a case to be made for that to be true. I think that there's a lot of stocks right now that are being thrown out. The saying, this with everything else, the saying is, throwing the baby out with the bathwater. I think that there's plenty of opportunity on some of these stocks that are now below what I think they should be fairly valued at. We'll go over a couple of those, which is why I think that, today's over under could certainly be could certainly be an interesting one, especially as we get closer to things, continuing to sell off and that sort of thing. So, like I said, it's not been pretty, but in my opinion, I think this is we've got to be getting close. I think we could see, a bottom here at some point. Um, it is what it is. Sucks out there, but I'm not going to continue. I'm not going to just sit here and react emotionally because of the way the market is moving. Um, that's saying something. Jeff Panicka says the market is bad, but in respects, lost more getting a divorce. Lost more money getting divorced. That's impressive, bro. That's impressive, Jeff. Okay. So those are my thoughts on the overall market. I mean, you just got, this is every day though, right? I mean, Z Writer says, honestly, it looks like we'll get to lower lows. Yeah, for sure. I mean, I think that there's, of course, that possibility that happens. I'm looking at a stable coin right now that was supposed to have, supposed to be relative to the dollar, right? Nice and stable. And then it's down. I'm talking about Luna, down 95%. Shit was trading at $119 just 3 weeks ago, not even. It's now trading at $1.22. So where we're living in right now. Is what it is. So what do you do? What do you do with that information? You can either react emotionally, take your money out of the market, but then you're also subject to losing even more money because of inflation. The value of the dollar is now continuing to get dwindled away, or you just stick it out. Depending on your timeline, obviously that's going to have to, play a factor. But I don't think that right now, I do think that right now is the absolute worst time to sell anything, unless you're trying to go short and get cute and play the market. Great question here, and we'll get into some of the earnings numbers, what the expectations are. But Steve Hoyer brings up a great question. Seriously speaking, recession. If not now, then when? How much more till we realize we're in a recession? That's a great question. We're not going to officially realize that we're in a recession until we get numbers from the second quarter. But, I've talked about this for a while. There's still no guarantee that we're going to see a recession. Could we see a mild one? Perhaps. We see GDP fall down some. I mean, when you compare it to last year's GDP, I guess by definition you would go into a recession, but you're not gonna, because I doubt that we're gonna see GDP numbers like we saw last year. We already saw a negative quarter for the first quarter. It's possible that we see it this quarter, and then that technically would put us into a recession, but textbook recession, I should say. When you look at, there's things that you need in a recession, and even in stagflation, as some people have been calling out. We talked about production numbers being down last month, and then increased wages were going up. Wages were going up. They went up around 11% last month, while production went down. Those are two ingredients that you need to make the recipe of stagflation. The other part, though, is job losses. Now, jobs came in a little bit. We're talking like 10 or 20,000 above what the expectations were last week. But we need significant job loss for us to go into a recession, for us to go into any kind of crazy stagflation. To me, I think as long as those numbers stay good, and again, that's a big if, that I don't know if we do see recession. Again, when we look at the way that travel is going, we're seeing money get spent in just different areas than what we have been seeing over the last 18 months to 2 years, right? Everybody was putting their money into things like Netflix and stay-at-home type stuff. But I think that when you look at where a lot of this money is shifting to, I keep going back to this, but it's just the truth. Delta, United Airlines, the cruises. We're going to hear from Disney today on what the parks look like. And everybody's saying so far, the parks are absolutely insane right now. Good luck trying to get yourself into Disney. And so I think that that's going to be a huge focus for Disney today, this afternoon. And we'd love to get your guys' thoughts on all of this. But yeah, Jeff Panicka says always compare real adjusted wages against actual wages and demand more money. Yeah, for sure. But that's kind of my thoughts on a recession. Is it possible? Yes, and I've said that it's been possible over the last quarter or so, over the last 3 months, as things kind of really started to heat up. Really, since Russia, happened, I changed my tune a little bit on a recession. If we didn't have the Russia-Ukraine situation kind of just exacerbating everything when it comes to energy and food and fertilizer, then I do think that we would have seen Jerome Powell's, transitory type move down on inflation. But this just kind of accelerated it all, right? So I think that it's possible that we go into one. I think it's more possible now than it was back in December, January of just a few months ago. But a couple things here about this. If we do get a confirmed recession, usually it comes into how do I say this? We'll see a huge expansion if we do end up seeing a recession. If we get a confirmed recession, there's a lot of data out there that shows historically we'll see a huge expansion almost immediately after in the stock market. And the stock market actually starts moving before the economy actually starts moving. We see that all the time, right? Stock market's a forward-thinking vessel. Right now, we are not in a recession. The stock market thinks we're going to be in one, so we might be in one. But once we officially hear that we are, that's usually when the stock market starts turning around. And look no further than 2008, 2009, okay? Look no further than that. You can if you want to, but they all tell the same story. So, but anyways, that's my thought on that. Those are my thoughts on the overall macroeconomy, blah, blah, blah. Okay. That being said, let's get into some of the earnings. Disney has earnings this afternoon. Their expected earnings per share is $1.07. $18.91 billion is the expected revenue. And this is something that, I talked about last night, if you guys caught last night's Disney video. But Disney has been treated very much so like a Netflix, like a Paramount and all the other streaming services, right? It's odd and ironic though that Apple doesn't get treated like that Amazon doesn't get treated like that, yet they all have moats just like Disney does, right? Disney has movies. They also have the parks, which is the biggest revenue driver was pre-pandemic. Now Disney's trading below pre-pandemic highs and actually getting ready to maybe start flirting around with pandemic lows. Right now it's trading at $105 a share. 79.07, I believe, was the pandemic low on Disney. So still got about 35% to go. But I think, in my opinion, that this move down on Disney seems a bit crazy. And I sent out a poll to you guys, and it's very interesting, the split here. So far, 78 of you have voted on the poll that I have put up about what will matter more to Disney's earnings. And I had put Disney Plus or their parks and movies. Now, most of you so far, 55% say that parks and movies. The other part of you guys are saying Disney Plus. The expected, I believe, and I have to go back and double check this, the expected increase in subscriber growth for Disney Plus is supposed to be somewhere around 2 to 4 million. We'll get those numbers, obviously, and we'll see how Disney is impacted by that. But then also, I think, again, you just look at this, and I think the parks really should be telling the story. Whether or not investors think that or not doesn't really necessarily translate, obviously, and it doesn't do this all the time. But we can look at something like a SoFi, right? SoFi has actually absolutely gotten beaten down. And, there was an analyst who came on CNBC this morning talking about SoFi being $123 stock. But I'm not saying that, but the growth for SoFi is so extraordinary, and all anybody ever continues to focus on is student loans, even though they're doing so much more. I think it's the same type of, even though it's apples to oranges comparison, I think it's still like the same type of mentality where people are just looking at one thing, and that's all that matters to Disney. And I think it's ridiculous, in my opinion. Disney has 126 million subscribers for Disney Plus. So when you add the amount of subscribers they had, and also to reiterate here, 24 million subscribers before the pandemic hit, all they did was add another 100 million subscribers to that. Now you add into the parks as well, and the results or that math equals Disney being less valuable than it was pre-pandemic. To me, it just doesn't make any sense. So for me, I think that this is actually a screaming buy. I think this just, I don't know. Of course, there's risk involved with this because of what subscribers, subscriber count how it could impact the stock. There is that risk involved there. But I don't know. I just think that this seems a bit ridiculous. It's gone too far. Did it need to come back down? Yes. Did it need to come back down this far? No. And I feel like that's what I keep saying about a lot of things lately. At some point, they'll turn around. I think that Disney could certainly tell us a lot of that. All right. That being said, there's other earnings to talk about as well. We'll get to those Disney earnings as the market is officially closed. We'll get onto the 5-minute chart here. We'll tune in to Rivian as well. Rivian obviously been beaten down. I can't believe how low this stock has gone. Well, that's a lie. I can believe it. This is trading at $20, came all the way down to $20. It's down 9.5%. Obviously, this week was a bad week because of their lockup period expiring. Ford decided to sell 8 million shares of Rivian, and who knows how many others decided to sell the stock as well. But this is trading at $180 shortly after its IPO, now standing at $19.25 as the intraday low there. And their expected earnings per share is a loss of $1.44. Average estimated revenue is $130.5 million, which doesn't sound like a lot. Guess what? Beyond Meat is only expected to come in at 112. Beyond Meat's only expected to come in at $112 million in revenue with a loss expected of $1.01. God, we just heard from Tattoo Turd earlier this week, and I just got to imagine that Beyond Meat is probably going to suffer somewhere around the same fate. This is trading around $270 shortly after its IPO. And remember, if you guys, some of my long-term fans here, some of the people that were watching me when we talked about the Beyond Meat IPO, that I saw the writing on the wall here. As crazy as this got, lockup period came, and all this has gone down since, literally for the last 3 years. This is just done nothing but go down. So we'll hear from them. Obviously, maybe they'll surprise us. We'll see. But that doesn't sound like a really promising earnings for them. Dutch Bros. This is one that I'm certainly interested in. Dutch Bros has been on an absolute tear as far as growth is concerned. The stock certainly has not been doing well, along with a lot of the other ones. 32.42 is kind of where this opened up when it IPO'd back in September of 21, and it's pretty close to where it was during its IPO day. Stock's up around 1.5% right now, but it doesn't look like it's on any kind of particular volume. This is kind of, think Starbucks meets just strict drive-throughs, right? They have small pop-up coffee shops. You don't go in and sit down. You just drive through, you get your coffee. Their employees kind of have the liberty of giving out free coffee and free snacks and what have you. It's a great atmosphere. The consumer is just eating this up on the West Coast. They're starting to expand over to the Midwest and hopefully East Coast as well. They come out with news on any of that today and with some good earnings and a great outlook, then I think Dutch Brothers could certainly start to rip up. This kind of has a meme type of feel to it. Not to say that it actually is, but this kind of just feels like that. So I think that Dutch Brothers, while, I think it's just, we're going to give them the benefit of the doubt. Let's just put it that way. Then you have Bumble, also something that also, by the way, has more revenue than Beyond Meat. That stock right now is trading slightly down around 0.75%. Expected earnings per share, a loss of 3 cents, 208.37 million. And revenue is the expectation there as well. Doesn't look like those earnings are out. And then there's Sonos, which I think is also interesting. Sonos has actually knocked their earnings out of the park. Really for the last several quarters, they've done really well as a company. Doesn't mean that the stock has to, but as a company, they've done pretty well. You can see, obviously, this has come down from mid-size of around 44.72, now cut in half, just like everything else. It's up around 1% here after hours. Doesn't look like it's moving on too much of anything just yet. But Sonos is certainly one that I think is worth taking a better look at. The company's doing in great shape. They're profitable. 7 cents per share is the expectation. $350 million in revenue is also what analysts are expecting here as well. And, they've inked recent deals with the likes of Volkswagen. The company, the brand is doing extremely well. I actually like Sonos here. I'd be surprised if they came in and gave us any kind of bleak outlook. Obviously, there's so many factors as to why they would, but that's something to me, I think is probably worth taking a look at as well. One of those under the radar type stocks that, we'll see where that goes. But nevertheless, we now have Disney that's up, just touched 4% after hours. It looks like those earnings are potentially in. We go see if I can find those numbers as they come out. Looks like perhaps maybe those those numbers are going to do. Those numbers are pretty good. Let's see here. Nothing just yet. So far, it looks like those numbers may be out. I'll get those out as soon as I can. So close the day at 105.19. 110.95 is what it just touched after hours here. And obviously gave back some of those gains. 1.5% is where it's at right now. Okay, so looks like maybe the guidance or the expectation was raised here, because I had 18 and some change on revenue, but the actual numbers here, it looks like 19.2 billion versus the 20.3 billion expected. They must have upgraded that. $1.08 versus $1.20. That seems to be the numbers there. So they actually missed. Interesting. Experiences and products operating income was 1.76 billion. Hulu and live TV subscribers 4.1. The estimated was 4.4, so they missed on subscribers. And then let's see if this actually makes the downturn. So none of these numbers actually look good. $1.08 again. So Disney came in 19.25 billion. The estimated was 20.1. They must have changed that, because I'm looking at, and this is just straight from Yahoo Finance, $1.07 and then 18.91 was the revenue here. I have two reports now that are saying 20.1 and $1.17. So they must have at the last minute changed this on me. Nevertheless, the stock's continuing to go up here now. It's up 3%. We had a little bit of a drop down. This is interesting. Let me just confirm. I'll grab another source just to confirm this. Yeah, that's what it is. $1.08 versus $1.19. 19.25 versus 20.04 expected from S&P Capital IQ consensus. So it looks as if the average was around 20 and some change as far as revenue was concerned. They came in at 19.25. $1.08 versus $1.19 expected. And there's your Disney numbers. Let's see if there's anything else that would be worthy of taking a look at, especially since this is getting bought up, a pretty decent clip. But they missed by $800 million on revenue. Let's see here. Interesting. Those are your Disney numbers. Guys, we have about 400 of you guys hanging in the chat, hanging in the news, hanging in the stream. I appreciate you guys hanging out. If you wouldn't mind hitting that subscribe button and a notification bell, I do this every day. Before Monday through Thursday at 3:45 p.m., I react to all of the earnings that are going to be released that day. I also give you my perspective on the overall market and how I think things are going to be going. So if you guys want to see more of this, make sure you hit that subscribe button. Would love to have you guys here. And then hit that like button as well, just to show some love. Before we get into some of the other ones, I just want to invite you to check out the link in the chat as well. It's in the description. There's also the join button next to subscribe. Each and every morning, I put a list of 5 stocks that I think are watching throughout the day and beyond. Sometimes I put out some swing trades and some long-term opportunities as well in there. I give a nice fundamental and technical breakdown each and every morning before the market opens. You also get access to our Discord group and all kinds of other goodies for $4.99 a month. You just can't beat it. It's a really great deal. Provide a lot of value. It helps me support, helps support the channel and everything you see behind you, the studio, all that good stuff. It all costs money. And I certainly would appreciate you guys putting that, supporting me in that way. Okay. Let's put up the earnings expectations. I just covered Disney. Disney came in and actually missed on earnings per share. They also missed on revenue, and they missed on streaming subscribers as well. So very interesting to see that the stock is up. Maybe it was a bit of a overreaction, but there you have it. Let's check out on some of the other ones. I did run over those real quick just to kind of give you the expectation, but I see some of you guys reacting to Sonos so far. The stock's now up 13.5%. This is what I was telling you guys that I was actually kind of excited about, that they've actually been crushing earnings here. And it's kind of been like a low key stock that I thought has been doing really well. So those numbers obviously look like they're probably out. Let's see where this is at. So revenue came in at 400 million versus the 361 million expected. Earnings per share came in at 6 cents versus the 4 cents that was expected. So they beat on earnings there, on earnings per share as well as revenue. Really nice beat for Sonos. Let's take a look at some other interesting notes here on Sonos. The stock is still absolutely ripping here. Wow, now up 14.5%. Holy shit. That's awesome. All right. Let's see here. Looking to try to find some interesting nuggets on Sonos. So if you guys are just tuning in, Sonos did report earnings, and they came in and smashed 400 million versus 361 expected. So they beat by about $39 million. They also beat their earnings per share 6 cents versus the 4 cents that was expected. Really solid beat there. And I would imagine the outlook is probably quite good. Trying to find anything else on this. But that is a solid beat. As soon as I do, I'll go ahead and share that with you guys as that news continues to come out. Let's take a look at Dutch Brothers. Doesn't look like there's a whole lot of good reactions from this one. The stock is down 25%. Good God. So much for being excited about that one. So Dutch Brothers is shitting a bed here. Woo. Absolutely getting wrecked. That's kind of what's happening to a lot of these stocks that report losses and then come in and don't do really well. Let's go ahead on earnings. They just get absolutely punished. Man, looking to find those numbers for you as soon as I do. Looks like they reported a loss of 2 cents per share. So they were expected to come in at a positive 1 cent per share. And it looks like they came in at 152.16 million versus the 145.56 million. So they beat on revenue, it looks like. So they beat on revenue. They missed on earnings per share. And that seems to be kind of the theme with some of the retail stores that we're seeing when it comes to hospitality. I mean, Wendy's and had earnings, same type of deal. Chipotle even talked about this. It seems as if just because they came in with higher revenue, this is kind of telling the story of inflation, right? Of course, they're going to have higher revenue because they're raising prices. People are still spending money, so those revenue numbers are going to come in higher. But the issue is going to be costs. They're going to have to. They're paying employees more. Obviously, things cost more as far as food, coffee, and all that. So this is kind of not really surprising to see this dynamic play out. Dutch Brothers came in, and they see guidance here. A little bit lower than consensus. So the rest of fiscal year 2022 was between 700 and 715 million, which is still really impressive for a company of this size. They're not very big. Consensus was around 717 million. So this isn't to say that I think you should just be up and give up on Dutch Brothers, but they're now not profitable when they were expected to be. And so this could be a continued theme. May get uglier for the company. The stock obviously reacting to this. It's down 27%. Jesus. That's that. I still think long term you're going to like Dutch Brothers. Obviously, in this environment, everything that misses on earnings, especially if it's not profitable, just gets absolutely whacked. But there you have it on Dutch Brothers. Man, craziness on that. So there's Dutch Brothers. Disney has checked back in with that. So Disney came in and missed on earnings per share. They also missed on revenue. Didn't really come in with exciting numbers on Hulu subscribers. The Disney Plus subscribers came in up 300 million plus. That might actually be what is actually saving the stock, believe it or not. Okay. Beyond Meat was also reporting earnings today. That stock is now down 11%, almost 12%. Who's surprised? Anybody shocked by this? Tattoo Turd came out and shit the bed. Why not Beyond Meat? All right, so let's see what those numbers look like on Beyond Meat. After hours now, it's trading down almost 12%. Closed the day at 26.17. Now trading at around 22.97. This is down 90%, over 90% from its highs, from its all-time highs. So does the fake meat does the fake meat business just go away? I mean, I feel like this is an absolute dumpster fire, right? Like it does, like this trend just, there's no way it sticks around. So the revenue came in at 109 million. If you guys recall, I said 112 was the expected. So they did even worse. Revenue came in at 109. This is terrible. $109 million was revenue. The expectation was 112. They came in at a loss of $1.58 versus a 98 cent estimate. That was adjusted a little bit too, because I think the loss was $1.12 or whatever is what I had mentioned earlier. But nevertheless, it looks like $1.58 was as a loss of $1.58. Guidance of 560 to 620, which would imply 26% revenue growth year over year. I don't know if that happens. That's interesting. But nevertheless, those are your numbers. Beyond Meat is an absolute shit show. Surprise, surprise. You make shit food, you're going to have a shit stock. Okay. Anyways, fake meat is going to be fake meat's going to be gone eventually. I feel like that's probably true. We'll see. BYND is another tattooed turd. Yes, absolutely it is. Tattooed Chef, Beyond Meat, they're the same thing. I mean, I don't know what anybody sees in Tattooed Turd. I don't know what anybody sees in Beyond Meat. I've been a Beyond Meat hater since the start. I thought the company was worthless. They evaluated this way too high when it was up at $270, and I've been shitting on it ever since, and turns out it's been right. Okay, looking at Rivian. So Rivian is up around 6.5%. Okay, let's see on those numbers. Now it's continuing to climb here. I mean, at some point you would think that this would change direction. So revenue came in at 95 million versus 114 million expected. I believe I thought that number was 130. Yahoo Finance is effing me up. All right. Earnings per share, they came in and missed on that as well. A loss of $1.77 versus the $1.50 that was expected. So the stock is up 10%. Makes a whole lot of sense. This probably has to do with guidance. There's got to be something on this. I'm sure their guidance is probably up from what the expectations were, and that's why the stock's continuing to move. Sales are probably expected sales are probably up. Here we go. This is also very interesting and promising. The company produced 2,553 vehicles and delivered 1,227 vehicles in Q1. I believe that was more than what the expected what the expectations were on that. Let's see what else we can find on Rivian, but they missed badly earnings per share and revenue. Let's see here. They expect to produce 25,000 vehicles this year. So I think that's an increase, and that's why the stock's probably moving up. So now it's still up double digits here. It's up 11.5%. Just to reiterate, they came in with revenue of 95 million versus 114 million expected, a loss of $1.77. That is, well, it's not as bad as, I guess, Coinbase with nearly $2 loss versus $1.50 expected. At some point, it's so bad it's good, guys. And it seems as if maybe that's the story behind Rivian. That 25,000 vehicle number is probably why this is moving up. So pretty decent move there. Rivian, still climbing here. It was up around 13%. It's giving back just a little, not too much. But now that's why that stock is up here after hours. So we've covered Disney. We've covered Rivian, Beyond Meat, Dutch Bros. I keep saying brothers. It's Dutch Bros. That's how you're supposed to say it. I'm pretty sure. Bumble. We did not cover Bumbles, I don't think. Bumble is now up 10.5%. Okay, let's see here. Find those numbers for you real quick. So some decent moves, even though none of these moves are actually giving it back any of what it lost. But whatever, you got to start somewhere. Let's see on Bumble. So they reported earnings per share of 13 cents versus I'm sorry. Oh, wow. This is actually really good. So they came in at 13 cents. The estimate was at 3, a loss of 3 was the expectation. So they came in profitable. Interesting. Okay. Stock's up 8.5%. They came in profitable at 13 cents per share. The estimated was at a loss of 3. Revenue for the quarter came in at 211 million versus the consensus around 208. That is very, very good. Bumble sees fiscal year 2022 revenue of 934 to 944 million versus a consensus of around 940. So a slight raise from expectations on Bumble. Not a bad quarter and not a bad number from them. I guess people out there getting their dating on again. Lots of singles ready to mingle, and that's why Bumble is up today. Pretty crazy. Pretty crazy move. An interesting move all around. So I see some people gotten their feelings about Beyond Meat. My comments on Beyond Meat here. By the way, guys, we're getting too close to the time we'll be doing over under. So make sure you're putting in the chat over under, and then your favorite ticker. I will determine whether or not I think that your stock is overvalued or undervalued. Put that in the chat, over under, and your ticker that you would like me to take a look at, and it might just show up on today's show. This is eventually going to be a sponsored bit. You guys are loving it. So let's go ahead and get those comments in. I'll be sure to scroll through and find my favorite ones that I would like to do on the over under segment. So make sure you're putting in there over under and your favorite ticker to determine so I can determine whether or not I think your stock is overvalued or undervalued. All right. So, okay. Just checking on some of the comments. And here in Europe, vegan food and meat altar is growing like hell. Every Monday, the new shops a restaurant. I guess you mean that like they're growing. They're not clearly it's not happening here in the US. I mean, Beyond Meat is not growing at all. $109 million in revenue. If vegan shops are popping up everywhere, it's not here, unfortunately. Well, unfortunately for anybody who's investing in that. I don't see how that goes anywhere here. A couple other comments. My BYND puts will continue to be happy. Yeah. Isn't like fake meat more expensive than real meat right now? Doesn't it cost more to get alternative meat and protein? I thought it was. Okay. Let's see here. I'm keeping bros. I keep saying brothers. Dutch Bros. Mr. DeSoto said I'll add in a couple days. I think you'll like that. You know, if you are in Dutch Bros, and you're looking at it long term, then yes, I think that's actually pretty good. So if you guys are just tuning in, before we get into over under, Disney came in and actually missed earnings. Let's take a look at the stock again. Revisit here. It's only up around 2.5%. They came in and missed earnings, $1.08 versus $1.19. The expectation revenue came in at $19.25 billion versus $20.1 billion. Subscribers are now at 137.7 million versus 135 million expected. And I think that's what's keeping the stock afloat for now. They're continuing to grow subscribers. And I think it seems that maybe they're taking up some market share. I mean, you look at something like Netflix that's losing subscribers. Disney continues to grow subscribers. You would think that Disney would be rewarded for that. It looks as if they are slightly. We'll have to hear from the conference call to see where this goes from here, what their outlook is like that. Sometimes conference calls will set stocks like this off. You just never know. It's still very early, but those are your numbers. Interesting. I think perhaps maybe the bar was set a little too high on that. I don't know, because like I had mentioned earlier at the top of the show, the numbers that I had from Yahoo Finance. I usually pull my numbers from Yahoo Finance, and they're usually pretty accurate. And the expectation that I had was at $1.07 with $18.1 billion in revenue. And it looks like they raised that bar kind of like at the last minute. I don't know when Yahoo Finance updates their numbers, but that's what I've had since Sunday. That's what I gave you guys yesterday as well. Then they upped it to $1.19, so that they come in and miss. If they came in on those older numbers, 19.25 billion would have been a solid beat by $1.25 billion almost on revenue. So very interesting that they adjusted that going into these earnings. But this is very interesting to see also that the stock is up around 3% solely on what I would think is just the subscribers count coming in higher than expected. So very, very interesting for those Disney earnings. If you guys missed some of the other ones, I covered Rivian as well. They came in and missed earnings, but then came in and talked about producing and shelling out 25,000 new vehicles over the next fiscal year, which a lot of people are very excited about. Stocks up around 6%. Dutch Bros came in, shit the bed. Beyond Meat came in and also shit the bed. Bumble came in and actually surprisingly crushed it. They're doing really well. Came in and upgraded their guidance as well. Sonos came in and crushed it too. That stock is doing really well here after hours as well. 386 of you guys hanging in here. I certainly would appreciate it if you hit that thumbs up. I certainly would appreciate it if you hit that subscribe button, as I do this every single day at 3:45 p.m. Eastern time to cover all the earnings and everything that's going on in the market. Plus, Sundays at 7:30 p.m. Eastern time, I go over the macro. I give you guys what I'm thinking for the market overall and what to expect for the week ahead on Stock Watch Sunday. So make sure you're hitting that subscribe button, hit that notification bell to get notified when I go live during those times. Guys, thanks so much for tuning in. Next, we're going to get to the over-under segment. So I see a lot of you guys put in over-under here. I love this. If you guys want to continue to do that, make sure you put an over-under and your favorite ticker, and I will determine whether or not I think that your stock is overvalued or undervalued. Before we get into that, though, I would like to encourage you guys to hit that join button next to subscribe or hit that link in the chat as well. Guys, each and every morning, I put a stock list together of 5 stocks that I think are worth watching today and perhaps also beyond. I'll give you guys day trading opportunities. I also give you swing trading and long-term opportunities on those lists. I put them out before the stock market opens, so you get an opportunity to check it out before you look at the open. And I give fundamental and technical breakdown on each one of those. I also give you access to our Discord group, among all kinds of other things, for $4.99 a month. It's about the cost of a gallon of gas at this point for a whole month. So I used to say that it was cheaper than a cup of coffee, but that's not true anymore. So at least it's cheaper than a gallon of gas. Go ahead and hit that join button next to subscribe, or go to the link in the description or in the chat. We'd love to have you guys as part of the crew. All right, let's get to over-under. So this is a very interesting one. SQQQ. Blade Runner put it on here. The SQQQ. Very interesting. So it's the inverse of the Qs. First of all, let's go ahead and take a look at the Qs. See where that's going. How much lower? So crucial breakdown on support of the Qs. Kind of hard to see, kind of hard to be optimistic on this one, on the Qs in general, until we see another support at 286. So I would say that SQQ is not overvalued. I would say it's undervalued at this point. Let's go back and zoom in on this daily chart. You can see that it's actually on a cup and handle pattern, believe it or not. This is the inverse of the Qs, and actually is breaking out. So we could see a continued breakout on the Qs on SQQQ as the NASDAQ continues to get sold off. Sucks to suck, I guess. PayPal. Interestingly enough, PayPal has come down, and the multiple is still very, I don't want to say high, but it's come down a lot. Now trading at 19 times next year's earnings. PayPal was trading at $45.50 when it was all the way up here at $300. Actually, it probably was trading a little bit higher than that at $300, but this is sitting at $310 just in July of last year, and has not turned around at all. It's now trading at around $75 a share. This is actually something that I'm really surprised about. Not that it's sold off, but we're now below pandemic lows on PayPal. It's trading at 19 times next year's earnings. Can it go lower? Yes. Is it undervalued? Also, yes. I think that PayPal is undervalued. The multiple here doesn't make sense to me. FinTech has gotten absolutely trounced right now. PayPal is just in the thick of it. Obviously, their earnings haven't been all that great, especially when you have comps of 2020 and 2021, right? It's going to be ridiculously hard to compare yourself to those numbers when you did ridiculously well. And this isn't to say that the pandemic was good by any means, but they certainly benefited from the pandemic because of how people were transacting through 2020 and 2021. But it's unfair to compare them to those numbers to expect them to just keep growing like that. So PayPal, in my opinion, is undervalued. When it comes back, your guess is as good as mine. but it's undervalued from here on out, the lower that it goes. So not telling you to go out and buy it tomorrow, but PayPal's undervalued as far as I'm concerned. Over under ASO. So ASO is an interesting one as well. We've talked about this one in the past. This is trading at 5 times next year's earnings. So 4 PE is extremely low on this. It's a breakdown on the chart. It's really breaking down. Probably continues to come down to maybe around 33, closed at 34.49. It's undervalued. Yes, I think it's undervalued at this point. This isn't some high multiple stock that has just gotten way ahead of itself because people just love it so much. No, that's not the case here. They just gave a dividend just before earnings last time around. They have earnings that are coming up not until next month. So first week in June, we'll see earnings from them. Right now, yes, it's undervalued. Yeah, it just closed below the 50-day moving average a couple days ago. And can it go lower? As I'd mentioned, I think support sits here at around 33.5. So yes, I think that it's undervalued, but doesn't mean they can't go lower. I want to make that clear. Just because I think it's undervalued doesn't necessarily make it a buy immediately, right? Over under on NEO. Now this is interesting because NEO obviously has been in a lot of trouble. China's been locked down. Stock's been again absolutely crushed. When I first started, I actually traded NEO way back in the day when they first kind of went public. It was at $3, $2 a share. Then obviously went absolutely nuts. It looks like it's about to retreat and retest those lows where I traded it about 3 or 4 years ago. So looking at NEO, look, they still aren't profitable. They're not really growing in a sense when you compare it to other Chinese companies such as Xpeng and even BYD. BYD is the absolute monster in China right now, and I don't know why not a whole lot of people don't really talk about it. This is about to break another support here at around 12. Actually looks like it did today. So at the close, it broke below a $13 support. So this looks like it's probably going lower. I hate to say it, it's still overvalued. I just don't like it. Okay. Let's see here. What else you guys got? All right, Zip. Zip came in. Let's see here. Over under on Zip. About 4.25% after hours. Interesting. ZipRecruiter. Oh, they had earnings today, didn't they? I have to check to see what those earnings are. This is trading at 149 times forward PE. What do you think I'm going to say about this? Stock's down, obviously, considerably. It's at all-time lows, but man, with that kind of multiple, there's no way I want any parts of this, especially in this environment. It's overvalued still. Sorry to say, newbie. Don't want anything to do with Zip. All right. Let's see here. I love Savvy Money Show saying I'm waiting till 69 on PayPal. I like it. All right, guys, that's going to do it for me. Tomorrow, we have more earnings that are coming out that I will be reacting to. So make sure you guys are hitting that subscribe button and that notification bell to get notified when I go live to give you those reactions. Let's go ahead and check to see what is going to be reporting tomorrow. I had it pulled up and now I lost it. There it is. Tomorrow we have a firm. We have a firm which has been absolutely beaten down. I can't believe it's trading in the teens. Aurora and a couple other small named ones as well. But in the morning, we have Six Flags too that we're going to be reacting to. And I can give you some follow-ups on some of the earnings from today. So make sure you guys are tuning in. Affirm's obviously going to be the big one. Would love to have you guys there to tune in on those. Just to give you a recap on some of the earnings. Disney came in, missed on earnings per share. They also missed on revenue, but beat on subscriber growth. The only other real big beats that I thought were surprising was Bumble and Sonos. They came in and crushed it. Rivian came in and actually did pretty well on expectations on production. It boosted that to 25,000 vehicles. And then they missed on earnings per share. They also missed on revenue there, though. Beyond Meat absolutely shit the bed, too. That pretty much covers it for today. Guys, thanks so much for tuning in. I'll see you tomorrow at 3:45 p.m. Eastern time. Until then, have a great night. What did I do this? Peace.